put down the heading as interest rate swap. I'll take the help of a data to understand the strategy. Let's put down. I'll take a help of a data. Fixed, floating, fixed, floating, and preference. I'll take A and B. These are the fixed floating rates which are there. 10%, 15%. Let's copy the data. I'll explain what it means as L plus 2, L plus 5. Preference is floating. Preference would be fixed. The objective of the topic is interest rate swap. Two people want to apply for a loan. A wants to take a loan at the floating rate of interest. B wants to take a loan at the fixed rate of interest. He wants to take a floating and a fixed rate of interest. The entire objective would be that their net intention is a floating that will remain as a floating, and they would be able to finance at a lower cost. For example, if they go on their own to the bank, they will get the loan at L plus 2. L plus 2 is LIBOR plus 2%, and this is fixed as a 15%. The rate quoted by bank to the A is, if he takes a loan, he will get a loan at a 10% fixed, and a floating he'll get a loan at a L.2 LIBOR, whatever the LIBOR is. The B will get a loan at a 15%, and floating he will get a loan at a L plus 5. That's the rate quoted by bank to the B party. A wants to take a loan at the floating rate of interest. B wants to take at a fixed rate of interest. The reason of taking a loan at a floating may be he expects the price to rate to fall, and the B party wants to take at a fixed rate. He might expect the price to go up. He wants to fix his rate. Now, the intention of this objective of this topic would be that the swap would be done in such a way such that his preference is floating, net result will come in the floating, but his net costing will be less than L plus 2. His net costing would be fixed, it will be less than 15%. It is as good as we are going at the same place, either taking two cabs or two auto rickshaw, we share the auto and share the expenses out. We reach our own destination. That is exactly the objective of the topic is. Their preference are not matching because their intention is he wants at a floating rate, maybe because the interest rate expectation is fall. If LIBOR falls, L stands for LIBOR. If LIBOR falls, his interest cost will start falling down. He wants to take a fixed rate of funding because he expects the rate to go up. Now, what they'll do is, the objective would be, they will be taking loan in such a way, he would go to the bank and take a loan at 10%, he will go to the bank, take a loan at this percentage, then between them, they will do some arrangement such that the end result will come, his answer would come in the floating and his answer would come in the fixed. His net cost would be less than 15%, his cost would be less than L plus 2. If you look at as of now, their combined cost comes at 15% plus L plus 2. That becomes L plus 17. Their combined cost is L plus 2. That comes out the L plus 17%. The costing of the second party comes out, if you go by different method, it's L plus 15%. That means if they do the opposite, their costing will reduce by 2%. That 2% they will share in between them. It is as good as two of you go for a outing and we share a cab. The cab or auto rickshaw, you pay the common amount, and amongst them, amongst yourself, you do the sharing. For example, 100 rupees one party, 100 rupees two. Two different autos would have been 200 rupees. You go in the common, it could be 110 also, it could be 100 also. Whatever you save, 100 rupees, you can share amongst yourself. That means your costing would reduce, you will reach at your destination. Same is the objective here. His costing is L plus 2, his costing is 15%. The combined costing, if they go on their own, is L plus 17, LIBOR plus 17. And we are not concerned what LIBOR is, what maybe the LIBOR is, 15, 16, 10, 11, 12. And if they go the opposite, the combined costing will come as L plus 15. That means 2% they will share. Arrangement will take place, one with the bank, second amongst themselves. That is the objective. Swap is basically interchange. That is a swap which comes out. Let's put down a small note below that, please. Objective of this topic is, objective of this topic is, objective of this topic is, objective of this topic is to create, objective of this topic is to create arrangement between, to create arrangement between, arrangement between A and B, A and B, such that arrangement between A and B such that their preference is retained, such that their preference is retained, such that their preference is retained and cost reduces. Their preference is retained and cost reduces. Now, case 1 I am taking below that. Case 1, let's quickly put down. Case 1. Case 1, in this we'll put down, create a swap between, create a swap between A and B, create a swap between A and B such that create a swap between A and B such that overall gain, create a swap between A and B such that overall gain is shared between, such that overall gain is shared between A and B, overall gain is shared between A and B in the ratio of 3:2. Create a swap between A and B such that overall gain is shared between A and B in the ratio of 3:2. Now, the answer what we write is basically, we'll write what is the effective cost if they go on their own, what would be the effective cost if they do the opposite, that would be the effective cost. Let's put down the answer. Answer would be effective cost without swap. If you do not take a swap, L plus 2 plus 15, the cost comes as L plus 17. Effective cost with the swap. If they do the opposite, 10 and L plus opposite, A would take loan at 10, he will take loan at L plus 5. It comes out L plus 15. The saving would be equal to 2%. Saving would be equal to 2%. If they go on their own, costing comes L plus 17. If they do the opposite, costing is L plus 15, 2% is saving. Now, they would distribute this saving. This is basically what they do is the distribution of the gain. Distribution of the gain. Distribution of the gain would be A's share would be equal to, out of 2%, what is the ratio? 3/5. He gets a share of 1.2. B will get share of 2% into 2/5, 0.8%. Distribution of the gain. A's share would be 2% into 3/5. B's share would be 2% into 2/5, which turns out is 2/5. Now, in this case, that means if he would have gone on his own, his costing was what? L plus 2. His costing would have been what? 15. Now, I can say effective cost after distribution of gain. Effective cost after distribution of gain. Effective cost after distribution of gain. A costing on its own would have been L plus 2. He will get how much percentage of share of the gain? He will get how much percentage share of the gain? 1.2. His costing comes out L plus 0.8. B, if he goes on his own, his costing would have been, if he goes on his own, he wanted to go and take loan at what rate? Fixed rate, 15. Swap saves him how much amount? It's a point? Minus 0.8 percentage. His costing will reduce to what? 14.2. His costing will reduce to 14.2. Distribution of a gain. Effective cost after distribution of gain would be L plus 2 minus 1.2. B would be 15 percentage minus 0.8, which comes out. Now, how the structuring would take place? I'm making a structure with which I'll dictate the steps. Now, what would be the structuring takes place? A stands here, B stands here. A goes to the bank and takes a loan at the rate of, A goes to the bank and do the opposite. What he wanted to do, we ask him to do opposite. He wanted to go and L plus 2. We ask him to take loan at what rate? 10 percentage. So, he will go and take a loan at the 10 percentage. B will go to the bank and take loan at the opposite. Opposite was L plus 5 percentage. L plus 5. And we know their effective cost has to come what? Effective cost has to come what? L plus 0.8. Some sharing would take place between these two. That could be n number of permutation combination. Some sharing would take place between A and B such that his effective cost, I am writing effective cost first. His effective cost would come as L plus 0.8 percentage and his effective cost should come as 14.2 percentage. I am saying it again. I know that if the gain, if definitely gain would come, if they go on their own, the costing was L plus 17. If they do the opposite, costing is L plus 15, that is a 100% guarantee, 2% gain would come. If the distribution of a gain takes place, his share would be 1.2 and 0.8. Their net answer would come as L plus 0.8 and 14.2. Now, since I have to create how much A has to give to B, because some contract will take place between A and B such that his net cost comes out as L plus 0.8, his cost has to come 14.2. There are n number of permutation combination. There are n number of permutation combination. Simplest I am doing it, this could be a possibility. Anywhere you can stand and look at, for example, A goes to the bank and takes loan at what rate? 10. A will ask B, you pay me 10 percentage. That is a second step. Writing wise, this will become a second step. Go to the bank, take a loan at 10 percentage, receive from B. But to receive, I have to create, for the purpose of exam, I should know that his costing since has to come L plus 0.8. What should I give and what should I receive so that my costing becomes 10 percentage is my outflow with the bank. Net result should come as L plus 0.8. He will ask B to pay 10 percentage. 10% becomes inflow for A. 10% is outflow for A. A goes to the bank, takes a loan at 10 percentage. A receives from B 10 percentage. What is the impact as of now? 0. He wants to make sure his costing should come as what? L plus 0.8. Now, he will give to B L plus 0.8. Check from the A perspective. Is his target met? Is his target met? 10 is outflow. He went to the bank, taken a loan. He did not want a fixed rate. But because of the swap agreement, he went to the bank and took a loan at a 10 percentage. Received from B how much? 10. That is the simplest case we can make. Paid, received 10. 10 and 10 gets what? Cancelled. His net answer has to come what? L plus 0.8. Received from pay to B how much? L plus 0.8. That means if you look at outflow, inflow, and this is outflow, net answer becomes L plus 0.8. Let me focus on the B part. L plus 0.5 is inflow or outflow? Outflow. Paid to A, inflow, outflow. From bank taken a loan L plus 5, paid to A, inflow, outflow. Total becomes L plus 15. Received from B, inflow, outflow. Received from B, inflow, outflow. Inflow. L plus 5% outflow. This is what? This is outflow. This is what? Inflow. Net answer comes 14.2. L plus 5 plus 10 percentage. What happens? L plus 15 minus L plus 0.8. How much net comes? 14.2. That is the answer which comes out. Understand, there could be n number of permutation combination. I could stand at A, I could stand at B and then do it. I'll dictate the step, then you can copy that graph. Let's put down. Let's put down please steps. Let's put down effective cost of A. Let's put down these steps. Effective cost of A. Effective cost of A and stand on the A's part. Effective cost of A would be take loan from bank at what rate? Take loan from bank at what rate? At 10%. Take loan from bank at 10%. Second point. Take loan from bank at 10%. Second point. Second point. Pay to B. Pay to B what? Pay to B how much amount? L plus. Pay to B L plus what? 0.8. Pay to B L plus 0.8. Pay to B L plus 0.8. And receive from B 10%. And keep your focus on the graph also. Graphical presentation helps me out a lot. Take a loan from the bank, first step 10%. Pay to B L plus 0.8. Deciding is basically I knew my net cost, hence I've taken. There are n number of permutation combination which could have been done here. Then pay to B, receive from B, that has become third effective cost. Third effective cost. Third effective cost. And put down how the effective cost would be calculated for the third step. Effective cost would be your outflow was equal to from bank 10 plus what? Plus what? L plus 0.8. How much it becomes? L plus 10.8. Received from B how much? Received from B how much? How much you're receiving? 10%. Net cost comes what? L plus 0.8. Net cost comes L plus 0.8. Now, you tell me if A would have gone on his own. First step was bank taken loan, paid to B, received from B. Third is this. If A would have gone on his own, what was the cost if A would have gone on his own? L plus 2. With the swap, how much costing comes out? L plus 0.8. Fourth, I can write what? Saving. How much saving? If you go on his own, your costing would have been what? L plus 2. With the swap, costing comes what? L plus 0.8. Saving comes how much? 1.2. That is exactly what we calculated up. That is exactly what we have calculated on the top. L plus 2. Now, try to help me out before you write the steps. B, how would I make for B? Sir, that means are they doing the opposite? Yes, they wanted to take this. Because of swap, they're doing opposite. But net result has to be this. It is as good as when you, let's suppose you have to go to some place and cab you share. If the cab says, I'll drop you 5 kilometers away from there, then you do something else. We'll never share the cab. The cab says, I'll drop you at a destination, but at a reduced cost. It is exactly same. That means I will give you the fixed at a reduced cost. If you go on your own, it is a 15%. With my swap agreement, it would reduce below 15%. Now, if I try to create a step, he did the opposite, went to the bank, take a loan at what rate? L plus 5. Then paid to B how much? Paid to B how much? 10. Paid to A, sorry, how much? 10. Received from A? L plus 0.8. Effective cost came out. Outflow, this is inflow. Net came 14.2. On his own, if you go, costing would have been 15. With this kind of agreement, what comes out? 14.2. Saving? 0.8. Let's put down these steps, please. First step, let's put down these steps. Let's put down the steps. First point. Take a loan from bank at. Take a loan from bank. Take a loan from bank at L plus 5%. Take a loan from bank at L plus 5%. Second, take a loan from bank at L plus 5%. Second, pay to A 10%, pay to A 10%, and receive from A, what? L plus 0.8 and receive from A L plus 0.8. Effective cost would be equal to outflow how much? L plus 5 plus what? L plus 5 plus what? 10%. That net outflow becomes L plus 15. And inflow what he has received from A is L plus what? 0.8. L outflow, L inflow, my effective cost comes out 14.2. Effective becomes 14.2. If you go on your own, what was your cost? If you go on your own, what was your cost? What was your cost? 15%. And with this kind of arrangement, cost comes what? 14.2. 14.2. Saving 0.8. Saving 0.8. If you go on your own, your costing would have been 15. With swap, the effective cost comes out what? 14.2. 14.2. That means how much you've saved? 0.8. Now you can copy this graph. Without making this graph, it's difficult for me to create a structure. Without making graph, now you can copy that graph, please. Now you can copy that graphical presentation. It's A, B. Sir, is it necessary to take 10? I understand how I've kept 10. I fixed this person and then this. Sir, can I fix B and then do it? You can try that out. Answer would come same. Or you can try n number of combination. I know my net result has to be L plus 0.8. My net result has to be 14.2. You can do n number of permutation combinations. You can do n number of permutations combinations.